Hi, everybody. Hello there. Hello. All right. Good evening, everybody. Good evening, ladies and gentlemen, boys and girls, brothers and sisters. Good to have you all here. I see a lot of people still joining us here this evening. They're all coming online here. Okay, gotta get early. Let's start the recording, folks. It is now 8:01 Eastern Time. Here we go. And good evening again, everybody. Welcome to DayTradeSPY.com's weekly beachside chat. Up until now, we had a fireside chat, but it is officially summer. In fact, this is our first session after the official start of summer, which was what, last Thursday? Last Thursday, the 20th of June. That would have been, yes, Thursday. All right, good to have you all here, folks. And my name is Hugh, and a lot of breath here. Just kind of running from the where's it running from here? I was just looking for something here, and let me pick up my PowerPoint. Okay, there it is right there. All right, catching my breath here. Yeah. Okay. It is Sunday night, and June the 23rd. Folks, there's the questions box. You'll find the icon on your Zoom dashboard. Click on that. I'm the only one that sees that. We're going solo here this evening. I believe Aaron is off tonight. Not a problem. We go solo a lot. And again, like as I mentioned, there's a questions box. So I'm the only one that sees that. So go ahead and say whatever you want. Your questions, certainly try and answer some of them, all of them, hopefully. And we're not gonna keep you here all night, but we'll certainly try our best to get to all your questions. I'm gonna give you a couple seconds here to read this disclaimer, so that keeps us out of trouble. And I'll let you just give you a few seconds to read this while I go over some questions. Okay. You alone are responsible for your own trading, and past performance does not guarantee future results. Charts are courtesy of Schwab, Thinkorswim, and also Tasty Trade. If you are new to options, folks, let us know in the questions box. I kind of want to know if you are new to options. If you don't know what options are, let me know in the questions box, okay? And we're going to move along here. So, okay, let's go back here. Again, my name is Hugh. Hugh Grossman. Okay, there's my picture. I'm just looking here at the I got a background here of hang on, let me get some lights on here to try to make this a little bit easier for you to see me. And let me get the lights. There we go. I think it's still, well, I guess it's not bad, right? You can see me okay. You know what, let me bring the drapes down a little bit here, the blinds down. Maybe I think you'll see a little bit better view of my face there. Okay. And can you see the flowers back there? I'm gonna bring it down just a bit more so that blocks out the sun. There, we should be good. We should be good. All right, cool. All right, gang. I am your host, and here's my cohort, Aaron. But just so you know, I'm the experienced trader. I've been around a long, long time doing this, many years. And somebody asked me the other day, when actually did I start my first trade? And I couldn't even answer them. I don't recall. It was many years ago, long before I started teaching this stuff. I started trading, and a friend of mine told me about options. I started trading options, and things just ballooned. I had no intentions of ever teaching anybody back in those early days, as you can imagine. It just all sort of evolved into this amazing program that we have. But I've been teaching formally since 2010, so we're in our 15th year of teaching people how to day trade SPY options. I started trading equities, rather thrust into the program of trading because my own financial advisor blew out about half my account back in the early days. Excuse me while I take a drink here. And what happened was I had no choice but to learn how to trade. I felt that if I leave my money with my financial advisor, he's going to blow up the other half real soon. So we had some words, and I took back my account, and I figured, I mean, I could lose my money just as easy as anybody else. Coming from an internal audit background and in the insurance industry, I was quite familiar with risk and numbers. I was quite comfortable with that. So I thought, why can't I do this? And frankly, over the years, I discovered that if I can do this, you can definitely do this. All right. So anyway, I learned a lot of things over the years, mostly from the trenches trading. And by that I mean, yeah, I learned a lot of theory with a lot of different courses and different things, but it was that really hardcore in the trenches trade. You know, when you lose a trade and you go back and review what went wrong and you see, okay, what could I have done differently? How did I think this trade was good yesterday and all of a sudden today it's no good? Just what happened here? Anyway, over the years, I learned how that, first of all, if I do less of what doesn't work and more of what does work, that eventually, you know, your fortune turns around and you actually become pretty good. So that's what I do. I look at short-term breakouts, do those small daily gains multiple times a day, and they add up pretty nicely. They add up pretty nicely. So, but anyway, I've been training a lot of people since 2010, and we combine fundamentals and technicals. Now, Aaron, on the other hand, all right, he is he's what I call the smarter trader. By that I mean he's developed a real knack for technical trading. He got right in there and learned how to study. He studied and learned this whole technical deep dive analysis back when he was well, he opened his first trading account when he was 17 years old back in high school. And we Eagle Financial Publications bought us out about a year and a half or so ago, a couple of years now, I guess. And they scooped Aaron from a $150 million commodity fund. So he's a gentleman that identifies high probability trades. So Aaron has his set of indicators, and I have my set of indicators. So independently, we will assess the markets in our trading room every morning. And if Aaron says the market is going to go up, for example, and if I say the market is going to go up, you might want to buy call options. All right. And I'm assuming you know what call options are. If you are new to trading, a call option it's the name of an option. If you expect the market to go up, you would buy this option. It's called a call. If you expect the market to go down, you buy a put option. Call up, put down. Very easy to remember. But anyway, Aaron and I have been doing this now for quite some time in a trading room. And if he says the market's going to go down, and I say the market's going to go down, it's probably going to go down. You'd probably do well with put options. Now, if he says it's going to go up and I say it's going to go down, or he says it's going to go down, and I say it's going to go up, well, I just kind of hold off a little bit and see, well, what's going on here. And quite possibly, quite probably, both of us are going to be right at some point. But anyway, together we have this saying that says something like, when our indicators unite, our trades ignite. And there's a lot of truth to that comment. But we've been doing this now. As I understand it, we have the longest running trading room. Again, going back 15, we're in our 15th year. Before I go any further, I just want to invite you, if you're not already a subscriber, to Spy on the Market. This is the newsletter that goes out every Thursday morning. I write the newsletter. It's just a very brief 3-minute read, light, relevant, entertaining. I think you'll quite enjoy it. You really should subscribe to this. Simply go to the website daytradespy.com and leave your name and email address with the little pop-up that comes up right at the very top. I should probably, well, here, this is what it looks like. This is what it looks like. You just leave your email address there. It'll get you on the email list for Spy on the Market. Again, this is a newsletter that's going to pop up into your inbox every Thursday morning, and I think you'll really quite enjoy it. This week's topic, you'll find your preferred strategy. Find your preferred strategy. All right. So this is again the pop-up that you'll see when you get to the website, and leave us your name and email address, and you'll get the free report. You get a free report here, the 7 tips, tricks, and traps from Day Trade Spy's head trader Hugh Grossman. That's me. And also it'll get you on the list for the Spy on the Market newsletter. Tonight's agenda, we're going to talk a little bit about last week, preview of next week, what's coming up next week, give you some Q&A. Any questions or comments you might have, put them in the questions box. We'll certainly try and get to them. Then I'll talk about the trading room, and if there's enough interest, we'll get into an options primer if there are enough people who are very new to options. If you are brand new to options, this is the place you'll want to be, okay? All right, let's move along here. Review of last week. Well, this is what the chart looked like last week. Every one of these candlesticks you see on this chart represents 1 hour of time. Starting with Monday, we've got Tuesday, we're off on Wednesday, then Thursday and Friday, which is why it was a short week. So what happened Monday? Why did the market go up? Well, we had better than expected Empire State Manufacturing Index numbers that had come out. That moved SPY to a record high, and we topped out over $548. That was actually a very much of a catalyst that moved SPY higher. On Tuesday, we had some anti-inflationary news that come out here, lower than forecast retail sales data, not date. That should be data. Let me get this back and correct data. Okay, there we go. And that continued the rally further on up on Tuesday. Again, hit another record over 548 by the time we got into post-market activity there in the middle of the night. Markets closed on Juneteenth day. All right, but we did hit a record high of $551.12 in the middle of the night there, right on Thursday morning. On Thursday, despite slightly higher unemployment claims and lower Philly Fed manufacturing index and housing data, SPY dropped on profit taking after it hit that high, and we saw some real quite a sell-off going on over there by let's see what it went from about 551 right down to about 545. There's about a $6 drop before the day was over. All right, so that's perfectly normal to see that when you see a record high. You'll see that retracement and some selling off that's taking profits. Quite normal. On Friday, we had some industry expansive S&P Global Manufacturing PMI and S&P Global Services PMI reports. They were both over 50, which is an expansive number. And that kept SPY range bound most of the day, closed about 28 cents lower than it opened. So we had some bounce during the day there, but a little consolidation going on. We're seeing lower highs, higher lows. We'll see what happens here on Monday. All right. So from a seasonal standpoint, that blue line at the top is where SPY is now. By the way, we only trade SPY, SPY. SPY is the stock that follows the S&P 500, the top 500 stocks in the U.S. And that is why I like SPY, because this way, pretty well, where the economy goes, you can pretty well track where the stock market is going to go. All right. And these days, if the economy is good, the stock market is generally on the negative side, right? A little bit bearish. If the economy is bearish, you'll find the stock market bullish. I shouldn't say that. If the economy is negative, you'll find the stock market bullish. Why is that? It's a function of interest rates. Right, it's interest rates. If the central bank, the Fed Reserve, feels that we're in an anti-inflationary time, right? They want to reduce inflation down to 2%. Any news that moves the market in that direction is going to be good, and the Feds are most likely to reduce interest rates sooner rather than later. And right now, I believe they're talking about possibly closer to the end of this year, maybe even into next year. They're in no hurry to reduce interest rates. They want to see more data, and before they reduce interest rates, we can't seem to get this last little bit down to that 2%. So that's the relationship there. And what we're interested in is making money on the stock market. So I get quite excited when I see a negative economy, because I know that that is going to inspire the Feds to reduce interest rates, and therefore the stock market is going to go higher. Anyway, SPY, that blue line is where SPY is now. That red line here is on the bottom of this chart is a composite of the last 5 years closing price on the daily chart. And you can see here that if we go back historically, SPY rose a couple points in the last week, and also coming up in the next week, SPY rose about another 2 points. If you believe that historically we are going to follow what SPY did the last 5 years, that's actually good information to know. So what happened last week? Well, the Fed's currently put on pause, but any effects of previous tightening still filtered through the economy, with early signs of consumer fatigue starting to surface. So still kind of sitting in that zone where they're watching carefully, right? They don't want to pull the trigger quite yet. All right. We also see lighter demand might moderate inflation a little bit more, provide more confidence for Feds to start cutting rates later in 2024. They are a little speculative as far as that is concerned. They don't want to raise rates too early, or sorry, lower rates too early. They want to make sure the inflation rate is coming down. They're really trying to push that inflation rate coming down. Rising stock, household housing prices drove household net worth to record highs, but wealth is not distributed equally. Low-income consumers are under increasing pressure. Still, much of the inflation is still in the housing sector. That is actually still driving inflation, that whole housing sector. And they say that if inflation continues to cool and employment remains high, economic expansion in the bull market should continue. Although although consumers don't feel great about the economy, here's the irony: even though the stock market is hitting record highs and we've got good employment and a lot of production and a lot of stuff going out, despite again record highs, we had this year 31 record highs on the S&P 500. 31 record highs. Now I know in an election year and all the rest of it, but I mean that's just amazing here. Low unemployment and an economic growth of 2.9% of the last 4 quarters. Consumers still feel lousy. Consumer sentiment hit a 7-month low in June, reflecting a pessimistic view of personal finances and overall business conditions. And here's a graph provided by Bloomberg and Edward Jones. We're sitting here riding at a relatively low level of consumer confidence, consumer sentiment. So consumers, even though we're riding quite high on the economic scale, they don't feel like they're rich. They just don't feel like it. So interestingly enough, the U.S. average hourly earnings growth is now catching up with inflation. We've had 13 months of wages growing faster than prices right here. And if that trend continues, we'll see what happens. That could be an issue because wages and salaries, labor costs are also taken into account with this inflationary numbers. And again, if that continues, we may see a little bit of a delay in the Fed's cutting interest rates. This last week, the S&P rose 0.6%, total year-to-date 14.6%. NASDAQ is chalking up a 17.8% gain year-to-date, and the Dow is trailing down at 3.9% year-to-date. So this is what's kind of happening. We're still chugging along right here. Coming up the week ahead, Monday, it's going to be a low, no news day. On Tuesday, we have a conference board, consumer confidence report, Richmond Manufacturing Index report. We also have a dovish member, Fed member Cook speaking, and a hawkish Fed member Bowman speaking on Tuesday. So they could balance each other out, depending, of course, on what they say. Wednesday, we've got new home sales and unemployment claims on Thursday, along with personal consumption expenditures. This is a key number that the Feds look for inflation, the PCE report. All right, and that is coming up on what is it, Thursday? I just want to make sure, check the time on that one here. Let me see what that would be. Thursday PCE report. Where did we get that? Again, just kind of dig it out here. Was that Thursday? Thursday PCE report, June 27th. Right, where did I see that? Funny, I can't find it now. Where did I see that? I'm gonna have to find that. Durable goods orders, pending home sales. I am just looking for that PCE number. For some reason, I can't seem to find it. I don't want to waste any more time with this, but I'll have to dig it out. And that may not be. Maybe there's been a change. Maybe I missed it here somewhere, but that is on Thursday. Okay, I'm not really sure where that is. Let's strike that off the list for now. I don't know if there's been a change in the schedule, or I just don't have that here. Okay, let's just for now, because I want to get confirmation on that. So I'm going to scratch that PCE report because I don't see that on the schedule right now. But we do have GDP numbers coming out here on Thursday, pending home sales. And if I can find that PCE report, I will let you know. It doesn't seem to be on the schedule now. So they're always updating the schedule, right? So what you're seeing 1 minute may not be there the next. So there might have been a change in that. Anyway, let's move on. On Friday, we've got Chicago PMI, University of Michigan Consumer Sentiment, also University of Michigan inflation expectations. We have hawkish Fed member Bowman speaking. She is also going to be speaking at 12 noon Eastern time on Friday. All right. Okay. And yes, it is actually the PCE index is actually going to be on Friday. So that may have changed, but that is going to be on Friday. So let's punch this up here. PCE, PCE, okay? And and again, some of these items are subject to change. So as you can appreciate, nothing is ever written in stone, but do expect some volatility as follows: low on Monday, moderate Tuesday and Wednesday, and it's going to be high on Thursday and Friday. So as far as trading, I would go easy tomorrow, but prepare for greater gains later in the week as high impact news is released, right? High impact news is released, and what you want to do there is get ready for those and watch the indicators a little more carefully. Go for greater gains. Pay attention to what we talk about in the trading room, and follow along, right? All right, 2-minute tutorial. I've been asked this question a few times over the last several weeks. I have some people who are looking to quit their day job. One gentleman was adamant. He says, I've been with the same company for many years and I'm looking to get out of it. I just want to trade for a living. Excuse me. When do I leave my job? He said, well, how are you doing trading? Well, I'm learning. I said, well, here's what I would do. You wanted to know, when am I going to know? How do you know? How do you know? You know, well, when you're consistently making more trading than you are working, this is when I left my job, okay, as internal auditor. When I was consistently making more money trading than I was working, and when I had people coming, when my boss would, here, I'm going to put this up here, and when my boss and everybody else in my office would be centered around my computer in the morning looking at my trades instead of working. We spent an hour or so looking at my trades in the morning instead of working. Of course, you always have to put in the time later on down the road, work through lunch or stay late or something. Not a problem. But when your passion shifts to trading, when you're thinking about trading more than your job, and I had a dentist I was talking to a while back. I can't remember now. It must have been a year or so ago. He was telling me, I started trading. He says, I got to be honest with you. I'm sitting here drilling somebody's tooth, and that's just so automatic. I just automatically do it. But my mind, believe it or not, is on what is the stock market doing? What is the stock market doing? I'm thinking, man, you should be paying attention to what you're doing here, right? I mean, you're going to drill the wrong tooth. He said, no, no, that's okay. But so when your passion shifts to trading from your job, and when your boss's attention turns to your trading, and you're making more money trading, and you're doing really, really well, then I say, wait 6 months. Don't quit yet. Don't quit yet. All right. You want to get in, you want to get in the trading room, you want to learn our strategies, our bread and butter strategy, our OMG strategy, our scalping strategy. You want to learn all of that. Don't just, you don't know, are you on sort of a temporary role, right? Where you're making a lot of money and more, and you're brand new to this, you're focused on this trading instead of your job. Um, 1 or 2 months is not enough, I don't think. I mean, for me, I can't remember now how long I waited before I quit. Probably a year, close to a year, I'm guessing. I just, I mean, quitting a good secure position in a company and benefits and somebody asked me the other day, do you have any benefits as a trader? I said, no, I don't have any benefits. In fact, I don't even have any friends with benefits. So, but it was you want to wait until you're really, really, I mean, you're never really sure, but you want to be as sure as you can, right? You want to be as sure gets. There's always going to be a risk with trading, and the danger is probably more with the person in the mirror than the stock market. In fact, not probably, for sure. The danger is going to be the person in the mirror rather than the stock market. You're going to want to, if you get good at this, you're going to want to put more money into it. You're going to feel overconfident. You're going to do calculations. You're going to say, well, if I put $50,000 into a trade, I only need 5 cents, to make my daily income or whatever. You're going to be a little more, money seems to lose the value when you've got a lot of money in a trading account, right? It's just so easy to see your account go up and go down, and it just doesn't have the same impact as if you earned it on a sort of a job. Anyway, I just suggest here, wait a bit and then quit when you're very, very comfortable with what you're doing, then make the transition. Don't jump out of your job quite yet until you are absolutely sure this is what you want to do and you are able to weather the economic storms, the financial storms that are going to come your way. And that you are very comfortable with the discipline that you need, the money management that you need. You've taken our ultimate training course, you've gone through all of that, and you're very, very comfortable. Only then quit your day job, unless you're prepared to jump back in and whatever. All right, folks, the market provides opportunities all day long. We show you how to spot them, how to trade them. As a matter of fact, we have a very special workshop coming up on Wednesday. We have a very special workshop coming up Wednesday at 11:30 Eastern Time. I'm sure you'd have received the email on the bread and butter strategy workshop. And much to my chagrin, I didn't want to put this on for $199. But the powers that be said, no, we want to get a lot of people. We want to teach a lot of people your bread and butter strategy. And will you do it, Hugh? They twisted my arm. Fine. You guys you're the bosses, right? I'm working for Eagle Financial Publications. You're the bosses, whatever you think. And I said to him, but knowing what I know, all right, very seriously, knowing what I know with the bread and butter strategy, I would easily pay not just $299, not even $29.99, but I would pay $2,990 for that course. No problem, no questions asked. Let me get my credit card out right now. I would easily pay $3,000 for that course. Easily, no questions asked. That's how good of a course is. That's how important it is to learn that bread and butter strategy, because that's how much money this thing is going to make you. All right. It's not a joke. I mean, we have a lot of different strategies, and not a lot, but we got a few different strategies. All right. We've got the bread and butter strategy. Of course, that's what we're going to be talking about. I've got the scalping strategy, which is actually one of my favorites. But everything kind of um, centers around the bread and butter setup. The other strategies are essentially a spin-off of the bread and butter strategy. So we have, the scalping strategy, the OMG strategy. I mean, there are the little twists of each of these, but essentially the bread and butter, that is the essence of what we do. And when you understand that and really know it and inherently, instinctively, you're looking at the charts and everything, the setups, and you instinctively know this is a good setup. I no longer need the checklist or whatever. You should be making money on a regular basis, multiple times a day. Multiple times a day. So where do we discuss it? We discuss this in the trading room. Every morning in the trading room, you hear me talking about the trading room, trading room, trading room, trading room. That's where the action is, guys and gals. Okay. When I say guys, I mean gals too. I know we have a lot of people on the line here, women, men from all over the world, and I see some comments here. Good evening from Fort Lauderdale. By the way, on next Saturday, I am actually going to Fort Lauderdale. We got some stuff planned there. My wife's on the way down there now, and I'm going to meet her down there, and we're moving around the state or whatever for a week. But I'm going to have my laptops. I'm going to be doing the trading room from Fort Lauderdale and the Sunday night show from Fort Lauderdale or wherever, somewhere in Florida. I don't know, but we're going to be down there or somewhere en route. Good morning from Singapore. Tim, good to have you from Singapore. People from all over the place here. I love it. I love it. Okay. Doyle W, I'm new to options. Okay, tell you what, Doyle, we'll stick around, give you an options primer along with anybody else who wants to stay. Okay, so we're gonna have our session finish, and I'll tell you, and then we'll stick around for the options primer for those who are new to options. But I want to tell you about the trading room. This is the longest running trading room that we know of. We're in our 15th year. I don't know of any other trading room that has been going on longer than that. Some come and go. They all come and go. Some come in as a flash in the pan. One thing I notice is a lot of these guru type people, they have a stroke of luck, and then they set up something that, oh, this is the way to do it or whatever. I think the key to longevity is being able to emulate your trades over and over and over again and consistently make money. So you grow your account. We're not looking for, like I say, a flash in the pan. All of a sudden, you got lucky. Everybody gets lucky once in a while, right? Everybody's gonna have a home run once in a while. It's those singles and doubles that actually end up winning the race. I think, and we have home runs once in a while as well, but it's those singles and doubles that end up creating the long-term success, and that's what we teach you. That's what we do. So, Aaron and myself, we are the ones hosting the trading room every morning, 9:20 to 10:30 Eastern time. That's what we do, and if you know what calls and puts are, you should be there because you're going to learn and earn from. And I'm gonna blow my own horn here from the best. We've been doing it long enough. Combined, Aaron and I have over 40 years of experience in the stock market. Over 40 years. We don't actually have to teach anybody. All right. We don't have to train anybody. We can just trade ourselves. But one thing I will say, Aaron, and he and I are both from the same vein when it comes to this, is that we enjoy teaching other people. We actually get a real charge out of the accolades that come and things like, oh, I taught my kids how to trade, or I now have enough money to put my kids through school, or I bought that car I was looking at, or that boat, or the cottage or whatever. We now have enough money to put have my son start his own little business doing something, whatever. I mean, it's just an amazing tool to generate long-term wealth trading. And we've been doing this. So these trading rooms are interactive. Just like this session here, you're going to put your questions in the questions box. Aaron and I are the only ones that see them, and we can discuss your own personal trades as well. It's actually exciting trading. I don't recall ever a job that I was excited to go to work every day as I do trading. After many years, and the 15 years, by the way, is only the training part. I've been trading a lot longer than that. But even after all these years, I'm still very excited to wake up in the morning, check the markets, get in, do a trade, make some money, get in, get out, tell people about it. It's actually really pretty exciting. We teach what we trade, and we trade what we teach. So we're not throwing a lot of theoretical stuff. We're giving you a satchel full of books, and here you go, good luck. No. What we teach you, we trade ourselves. And what we trade ourselves, we teach you. No stone left unturned. People sometimes say, well, if you teach everybody how to trade and they're going to do what you do, doesn't that dilute the market or dilute your strategy? I said, no, actually, quite the converse is true. The more that people use our setups and our indicators and whatnot, the stronger the market, the stronger our trades become. More people are involved. And no, you're not going to dilute the market because, I mean, it's virtually impossible for everybody to be in the market that same split second in buying and selling that it's going to influence the markets. There are many, many, many millions of contracts that trade every day. And as much as I'd like to think, if everybody in our trading room hit the same button at the same time, it's not going to move the needle. So don't worry about that. All right. You can watch us make real trades, real setup using real money. If you got any questions, right? You got any questions, we get them answered here in real time. And again, we got the longest running trading room since 2010. So this is the thing here with the questions. All right. Um, you won't know a lot of times the questions until you think of them, and that's when you ask them. I had one gentleman there a couple of years ago. He said he kept he was in the trading room, but he would never ask the questions in the trading room. But after the trading room, he would send me an email with his list of questions. And the first few times I would answer them, being a nice guy, I'd answer them. He eventually said, I can't remember his name, whatever it was. I said, sir, the trading room is where you should ask those questions because that's where we're watching the markets in real time. We can answer them in real time. Go in and even your own personal trades, we can, help you with that. It's very difficult to go in after the fact and try and reconstruct those scenarios that you're presenting here to do. And plus, we just don't have the time to, we just spend this time in the trading room. We don't want to be sitting there, recreating all of that again. So you got to ask the question in the trading room, and he'd been doing that, and he turned into a very, very good trader. So last I heard, he's been doing very well. So anyway, folks, I'm going to tell you, I don't know what the website calls for in the trading room. I think, and I'm going to go check it right now. The website is called DayTradeSPY, and if you go up here, it says where is this? The trading room. Subscribe now. Now I think I see this a little different than you do. If you scroll down here, it'll tell you the price is $39.90 a year. But listen carefully. We have to put that on there, and that's what it is, and that is what it is. However, if you contact customer service at DayTradeSPY, all right, I believe they will still honor a special price at $6.99 for 3 months. So you're buying it quarterly. All right. And you also have, I believe, 30 days if you don't like it or it's not for you or it's just not your cup of tea, you can actually cancel, get your money back. But I guarantee you're going to learn a lot of stuff, even in that month of being in the trading room. You're not going to go wrong. So I would recommend email customer service at DayTradeSPY and get in on that. All right, get in on that. All right, 699 for three. Really? Again, I would easily pay 10 times that, knowing what I know about the trading room and the service and the information that you get in. So I mentioned that this is here we go. Let's get the water flowing here. Mentioned earlier that this is a beachside chat now, not a fireside chat. We'll save the fireside chat for the winter months, right? But when we're in the throes of summer, let's sit at the beach, which is where I am now. I'm gonna just kind of throw up the blinds here. Maybe you can see out here. I'm not really sure. I'm gonna take a look and see. I'm actually facing west out here. This is real, and sometimes you'll get well, not sometimes, all the time you get the sunset coming in here. So I don't know if you can see the sunset now or not. Not sure if you can see it or not, but anyway, but unfortunately you can't. I'm back in the dark when you get the light on there, so I think I'm gonna have to bring the blinds back down again so that you can see me a little bit easier. For those that want to see me, um, we joke that I'm the better looking guy. Aaron's the smarter one. But anyway, let's get to some of the questions and comments here. All right. Okay. All right. DayTradeSPY seems to be struggling the last few weeks. I don't think we're struggling. I'm not sure, Monty, what the struggle is. Whereabouts are we struggling? We've been having some pretty good results the last few weeks. We've had some. So sometimes what you'll see, depending on our programs, we've got the pick of the day, we've got the DayTradeSPY signal, we have various strategies, and sometimes we will have a strategy, but it just doesn't fill right away. All right. Sometimes the market will go down before it goes up. Markets don't go in straight lines. They zigzag. They zigzag up and down. Sometimes they'll come down before it goes up. What we try to do is incorporate the technicals and the fundamentals and the market sentiment. And sometimes the market sentiment is just, it's in a bad mood that no matter what you do, You can't get it out of that bad mood. It's like, you compare a lot of these things to everyday life. So those of you who remember having little kids, remember remember when your kids were 2, 3, 4 years old, that little bratty stage where they'd go into the temper tantrums, they could not express themselves, and or we could not listen to what they're doing, so they'd go nuts and they go crazy. And you know, the best thing to do is just let them have their temper tantrum. They'll wear it out. They'll fall asleep, wake up, and they'll be fine. Well, sometimes you have to let the market do that too. Okay, the market is a lot like that. For whatever reason, the market doesn't like what it sees or hears, or somebody said something, or something happened. So, oh, the market's it's in a sell-off, or we hate this, we're not gonna do it. And the market goes down, but I'm gonna tell you something. The market always, as sure as we're sitting here, always finds some level of support where the buyers are going to say, hey, I like the price. I'm going to start buying. I'm going to buy some shares because the price is down to a price that I like. And I know if I buy, it's going to go up. I'll just sell for a little bit higher. So they start buying, and other buyers come in. Other buyers see the buyers, and they say, well, if it's good enough for that buyer, it's good enough for me. They start buying. Buyers beget other buyers, right? And they increase the demand. What do you do when you get an increase in demand? This is basic high school economics. When demand increases, the price goes up. So you follow it up. So the money begets more money. It goes up. We're not looking to make those astronomical gains on the stock market. And if you look at the options change, you'll see that, my goodness, some of these options are as low as 5 cents to a high of $2 in one single day. We're not looking to make, 2,000% or 20%. Can we not make 5, 6, 7%? Well, I think we can, and we do. All right. So, but sometimes the market doesn't deliver right away. Sometimes you have to wait a little bit. You have to exercise a little patience. That's what it's all about. Here's a question here. If someone has $1 million account, is 1,000 contracts a reasonable purchase? 1,000 contracts at say $3. You're talking about let's see, what are you talking about? $300,000. If I had only $1 million in my trading account, I don't think I'd be buying 1,000 contracts, Dave. I think that's still a little too rich because of the risk. There's still going to be risk involved with options. That is one thing. There's going to be risk in everything. Everything we do. Crossing the street this morning, there's a risk. And I know you're being sort of far-fetched when I think of that. Obviously, you look around and make sure nothing's coming and stuff. But with options trading, there's definitely risk. If I had $1 million account, I would probably trade. I would probably trade no more than $50 to $100,000 of it in any single trade, but not before I learn the system that we have first and get very comfortable with it. Make sure you do 20, 30, 40 good paper trades first. Log them in your journal, in your log. All right, analyze them and all that. And when you get comfortable, then transition. Don't start with a $50,000 investment. You don't want to lose the $1 million. You don't want to get stupid. I noticed that there's this thing called the money to brains ratio, that the more money you have, the less brains you have. And it's so easy to blow out a larger account. I got a little story here to tell you about that. I had this one trader, I can't remember his name now, going back years. What was his name? I can't remember, but he took the course and he became very good. He became very good. And he would he would ramp up a trade from $2,000 to about $22,000. And and then he would do some bonehead move to knock his account back down about $2,000, $3,000. And then he would contact me and say, Hugh, I know what happened, but we got to get back together again and help me ramp it back up, which I did. And so we get together and he was very good. He was very good at turning 2,000 into 20, 22, $24,000. He'd come back up and do it. And then again, he would make some stupid move and back down to $2,000. We go through this after about, I want to say, 3, 4, 5 times this cycle. I said to him, hey, you notice there's a pattern here? And we got chatting about it. I remember he's telling me how, just in casual conversation, he would tell me how his father would always instill in him as a young kid how money was the root of all evil. And you shouldn't have too much money because it's the root of all evil and all this stuff. And we sort of thought that, well, maybe that ingrained attitude uh, or concern had an effect on his trading. He was never really used to having that kind of money, $25,000 in a trading account. My goodness. That's a lot of money. And so he would become careless or negligent or something. And maybe subconsciously he knocked it down. He felt that he shouldn't have that kind of money. He should not have that kind of money. So he would do something. So we changed things around. I said to him, okay, so let's do this. When you hit that 18, 19, 20,000, I want you to transfer 15, 16, 18,000, whatever, transfer from your trading account into your bank account. So you knock your trading account down to $2,000 because you're very good at turning 2,000 into $24,000. You're excellent at that. You know how to do it. But you just can't keep it. And he started doing that. And I said, and that's where the money should be anyway. It should be transferred from your trading account into your bank account. That's ultimately where you should be, moving your money. So he started doing that and actually became very good at that. And he's very happy and everybody's making money and stuff. And he was saying how, he wants to make his father proud. And that was the way he was doing it. So anyway, getting on some other questions here. I'm new to your system. Nancy, welcome, Nancy. Okay. Can you go over how to buy in the first 2 minutes without missing the trade? Well, when you get into okay, I don't know if you're referring to the pick of the day or the day trade spy signal or whatever, but for example, the pick of the day, when you'll get this pick before the market opens. The idea is to get in within the first 2 minutes. Wait until the bid-ask spread settle nice and tight within 2-3 cents of each other, so you got a good firm price. If the stock is going in your direction, you see the pressure going in your direction, buy then. If it's going against you, wait until it turns around. Might be a few minutes. Wait until it turns around, then get in and just simply buy right at that time. Always buy limit orders. If the market is moving quickly, the best thing to do is buy 2 or 3 cents over the ask price. So you get it, right? Get in the front of the line, and then you'll get it within the first couple minutes. I make a lot of money buying the first couple of minutes. So okay, Don R, thank you very much for that. Last week's profits were $707. Got about 10 more paper trades before I jump into real money. Thanks to you guys. All right, what's the difference between SPY, SPX, XSP? I don't know what XSP is. I knew all that stuff a long time ago. SPX. Okay, so SPX is the basket of the top 500 stocks. If you're going to pick a stock from all of those top 500, put them all in, you'll get the SPX. That's very expensive. Options are different. They're expensive. You can only convert them at close. It uses the European system. Anyway, SPY is the stock that follows the top 500 stocks. SPY is much less costly. You can get in with even a few $100s for a single contract if you want a couple $100. It doesn't cost much to get in. It's it's the most liquid stock out there. It's just the best tradable instrument out there. So not a problem. Mike is asking, is there a workshop for the pick of the day? Don't really need a workshop for that. Self-explanatory. In fact, every time the pick goes out, there's instructions on the pick email itself. Simply buy it, as I mentioned, at the market open. Put up for sale for 6% profit target. Walk away, come back later, collect your profits. We've been putting in a 40% stop loss, but it doesn't hit it. I don't even know if it ever hit it. Probably in the last month or so, might have hit it once. I can't remember. Maybe not. Carlos, like to talk on the phone. Leave me your phone number, Carlos. Not sure. I think I know who you are. Not sure I can. Leave me your email me, Carlos. Email me. Let's see, info. No, email HughG at DayTradeSPY.com. I'll give you a shout at some point. We don't generally do one-on-ones anymore, but I'll give you a call. I know who you are. What is triple witching day? We had that the other day. It's where the all the stock options, futures, all the different instruments expire on the same day. You generally get a lot more volume. Volume shoots straight up. Not necessarily more volatility, but you'll see a lot more volume. Da, 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 da. Let me see. Bread and butter workshop. Is the bread and butter workshop included in lifetime subscription service? Okay. So if you bought the Day Trade Spy Society, you got everything up until that point. Any future workshops, you got to buy those. And I had another question similar to this that says, well, I got the Ultimate Trading Workshop, which includes the bread and butter strategy. Should I still get the bread and butter strategy that's going to happen on Wednesday? That's a very good question. So my answer to that is I don't recall exactly what was in the bread and butter segment of the Ultimate Training Workshop. That was probably about a year ago. But if it was me, knowing what I know, spend the $199. You're not going to go wrong. There's probably going to be new material. Well, not probably. There is going to be new material in the workshop, more current material, right? Because we're constantly improving. We're constantly simplifying. We're trying to make things as easy, as efficient, and effective as possible. So I would, even if you had the Ultimate Training Workshop and you went through the Day Trade Spy, the bread and butter strategy, I would still get it for $199. You're not going to go wrong. And by the way, it's recorded. They are recorded. You're going to have access to those for quite some time. I'd like to say at least 6 months. Okay. Yes, PCE is on Friday. Okay, all right. Is your bread and butter course independent of the 995 course I purchased? Again, it's part of it, but get the workshop anyway. I think you're going to really enjoy the workshop, and it's going to be probably about an hour and a half long. Budget about an hour and a half long, so um, you'll have that. I'm just reading through some of these questions here. Yes, there will be some additional information added to that workshop. And yes, it is. It's going to be recorded. So even if you can't make it to the live workshop on Wednesday, if you buy it, you can view the recording. And I think that is, yes, Carlos. Okay, good stuff, Carlos. Uh, Carlos, punch up your phone number in the questions box. So I can pick it up from there. Mike from Ontario, Canada. Mike C, welcome. New Jersey. Mike G from New Jersey. Are you going to buy a house in Florida, Michael? No, I'm not going to buy. We have some timeshares or something down there. I know my wife takes care of all that stuff. But I know you're in real estate. Yeah, Michael V. If I was to buy a house, I'd be coming to you. No, no worries. So there's no class for the pick of the day. There's no class. It's just the instructions are very, very basic for that. I can tell you in like 2 minutes how that is. So. Tim B, thanks for the amazing sessions. I sent you an email about subscribing to the Pick of the Day and Trading Room. Grateful for your kind reply. When you get a moment, super. Tim B, I think were you the one that got your friend involved, Tim B? I think I answered that one, if that's it. So, Jerry K, yes, I'm still holding calls. They don't expire until, so I'm still holding some calls from the other day. They expire on Friday. I should be fine with those. Okay, no problem. You'll be talking about support and resistance. Yes, on Wednesday, part of the bread and butter strategy, we're going to be talking about support, resistance. We're going to talk about everything that makes up the bread and butter strategy, how we make the decisions on buying options, what options to buy, when to get in, when to get out. All of that is going to be covered. We're going to try and get into a trade. Hopefully, you can make 1 or 2 trades live. That'll be awesome. That'll be really good. So. That's kind of what we did. We did that actually several months ago with the scalping strategy. We actually did a couple of trades, one going up, one going down on the scalping strategy. I was just kind of showing a demonstration on that. Didn't realize that people were actually placing the trades, and they said they made more money than what the course cost. It was really working well for them. So, John M, thank you for that. I'm in the trading room member, like it a lot. The cost is relative to your investment account. I trade 2 to 3,000, so my results are not a lot. Trade mostly 4 or 5 contracts. I'm trading 10 to 20 contracts, which I plan on getting into into it, the impact will be a lot less. Oh yeah, so as you get into trading, okay, so start with a few contracts. You're not going to get rich on a few contracts, folks. Let's not kid ourselves. Start with one or two contracts, you get coffee money. You buy 5, 6 contracts, you're gonna have some lunch money. But you get into 10, 20 contracts, you get some pretty serious money coming in. A couple $100 a trade type of thing. You do that several times a day. Before you know it, you're making $1,000 a day, done by 11 o'clock trading. Now, can you live on that? If you make $5,000 a week, what is that? $250,000 a year? Could you live on that? And of course it goes up from there, right? So, um, how are you feeling about the direction of the market this week? I don't know, I haven't looked. I think it's probably going to move up a little bit, probably not a lot, but maybe some. Okay. Brian's asking here, what's the difference between the bread and butter strategy and the scalping strategy? The scalping strategy uses a lot of the bread and butter setups. We go for just a different approach, slightly different approach. I would say the scalping is a derivative of the bread and butter. The bread and butter is the essence of everything we do. You can have spin-offs of the bread and butter. Everything is discovered in the bread and butter. I'm getting the hiccups now. I'm not sure why. Must have been the rice that I had for supper here. Mexican rice. Mexican rice. Didn't really like it that much. Okay, let's see. Bradley, Friday was an interesting day for the pick of the day. You selected a call, but the market immediately went down, buying at the open still. We got filled on the calls here, Brian. Bradley, sorry, Brad. What is the strategy for getting out? Do you hold overnight until the 40% loss or out during the day? Again, markets are going to vacillate. Sometimes they're going to go down 10, 20, 30%. I don't even like to get out at 40%. Personally, I don't like to use stop losses. Okay, I have a different way of managing my trades because I happen to know that when the market goes down, let's say you're going to the upside, market goes down a lot. I know especially new people, they get very nervous and anxious and stuff, and they like to see stops. So we were told to put stops in. Okay, put a 40% stop loss. But in all likelihood, you're not going to get hit with that. The trades that we use, the trades that we select and that we recommend and whatever, those are high probability trades. They will likely hit the 6% or whatever before they hit a 40% loss. Now, if the stock goes down for me personally, say 30, 40%, but even 50%, 60, doesn't mean I'm going to take a loss. Why? Because I generally have enough time and I also know how to repair the trades if I need to. And these are all things that we teach as well. All right, Mark P, good to see you. I'm taking the Ultimate Training course right now. Started the bread and butter module today. Just wondering if the upcoming training would provide additional value. I think again, Mark, for $200, $199, I would do it. I would do it. You're not going to lose on that. By the way, I'm having a blast learning about the technicals. I look forward to increasing my paper trades using them. Thanks for being such a great mentor. Thank you so much for that, Mark. Love it. Love your comments here. All right. And okay, I'm going to kind of move along here. Okay. All right. Norm, been thinking about the pick of the day. My son and I are thinking of going no more than 2 days out instead of a week since we can buy more contracts, especially if that 6% is supposed to happen quickly. What do you think? Okay. So who wrote that again? Norm. All right. So there's a reason I like to go further out in time. It is because of the theta loss, even though we are looking to sell the same day. And I get this question a lot. Hugh, if you're looking to sell the same day, why would you buy further out? Why wouldn't you just buy same day expiration? Well, simply because when the stock turns against you, and it's going to sooner or later, all right, you're going to be in a position and the stock turns against you. Well, that theta loss happens quickly. And when they suck the premium out of it, sometimes it's a real struggle to get the premium back. And if you're in that trade for even an hour longer than you expected to, you're going to feel that theta loss. If you buy further out in time, you're not going to see that theta loss because it's not the same. You might have, let's say you buy a week and a half out, a week out or something. You might have, say, a 4 or 5% theta loss for the course of the day, which is not a lot. But if you buy same day or a couple of days out, you might have a 20, 30, 80% theta loss, 100% theta loss if you're depending on where you are with your options. So if a little bit of time goes by, you will feel that data loss. You will see it. And trying to recover, it's it's going to be tough. So here's the thing. Yes, you can make a lot of money with same-day expirations. And if you're going in the right direction, you can just do bang up results with that. But sooner or later, you're going to get caught, and the thing is going to turn on you, and you won't be able to weather the storm. Okay, it's going to sink you. So for that reason, I still like to buy time. Now, Aaron, on the other hand, he'll do some of his same day trades. I'm not really sure. I think he talked a lot about it in the beta test group, which is no longer the way it is. So he's more, I'm more risk averse than he is. So, all right. Anyway, all right, folks. I'm going to. There's a lot of questions here. Do I ever use market orders? I always like to use limit orders. I like to know the most I'm going to pay for something and the least that I'm going to get for something. Usually I get filled at a better price. I don't like to use market orders. Market orders will sometimes take you out for not a good price. All right. Tim B, thank you very much. For that. Thank you for that comment. It was my friend Ray who got me involved. He's already a customer. Thank you for that, Tim B, for that. Okay, thanks for that, Bill G. Even though you're running solo, great job. Thanks. Okay, so I'm going to move on here, folks. I am going to move. Oh my gosh, these dancers are just a little bit too aggressive. So what we're going to do here is just hold on a little bit, folks, because what I'm going to do is um, here we go. This segment is coming to a close, but if you stay, I'm going to do the options primer right after this song in a few seconds. Stick around for the options primer. All right, so let's move on to the options. I have a lot of new people who are new to options here, and I want to give them a special welcome. That this is if you're new to options, it's kind of an interesting thing because depending on where you come from, might be an equities background, could be futures or commodities or something. I found when I discovered options, it's like, okay, I came home. And there are few reasons why I really took to options. One of which was the fact that, and I heard all kinds of numbers, like from anywhere from 95 to 98% of options traders lose their money in the first year, then they stop trading. Actually, I found that to be very intriguing because I knew that, okay, all I have to do is just be smarter than all those people. If I can get to that 2 or 3 or 4 or 5% at the top, I'm going to take their money and they're going to lose it. They're going to lose it to me. And I thought that was a pretty good place to be. So we only trade SPY, as I mentioned, SPY, SPY. This is the stock that follows the top 500 stocks. That's all I trade. I don't look at anything else. I don't care about any other stocks out there. Once in a blue moon, I might do something. Okay, admittedly, I did buy, some shares of NVIDIA just before they split to get the split. Got the split, market went up, I sold. I don't really trade anything else. I trade SPY options. Why? SPY, highest traded stock out there. It's affordable, diverse. All the sectors are there, folks. You can't get more diverse than SPY. It's also more liquid. You can't get a more liquid stock than SPY. That means that when you go to sell it, there's a buyer there. Huge profit potential. And it's also very exciting trading. All right, that's why I like SPY. Well, what are options anyway? Options are actually contracts. I'm not looking to buy the underlying stock. I don't care about the stock. I don't need another stock certificate to put up on the wall. That's not it at all. I just want the contract. The contract gives the options holder the right, but not the obligation to trade the underlying stock for a certain price by a certain date. Now, options have names, calls if you expect the market to rise, Puts if you expect the stock to drop, right? Options have a strike price. This is the set price at which the stock can be traded for when it's exercised. They also have expiration dates. They all come to an end. This is the date at which the contract expires. Then you've got in the money and out of the money. In the money, this is where the underlying security is above the strike price for calls or below the strike price for puts at expiration. Allows the options holder to exercise it profitably. Out of the money, completely the opposite. When the market price of the underlying security is below the strike price in calls or above the strike price for puts at expiration. And it doesn't have to go in the money or out of the money at expiration to make money. As the market goes towards that in the money, you can still be out of the money and still make an awful lot of money because the value of your options is going to increase as you go into the money. All right. All right. Pros and cons. A lot of great pros, a lot of flexibility, cost efficient, huge leverage. Like I mentioned, get into the options market for a lot less money. And I'm going to show you that in a couple of minutes. The difference between buying options versus equities. Okay. Very high return potential, many strategies available. I'm not saying our strategy is the only one. There are a lot of different strategies. I like our strategy because it's also fun, exciting trading, and you can make a lot of money. There are some constant trading options. You get your time decay, as I mentioned. We call it that theta loss, theta loss. And by buying time, and by the way, further to that explanation about why buy further out when you're looking to sell today. Yes, even though it's going to cost you more money, you're going to get it all back when you sell anyway, so it doesn't much matter. So maybe instead of buying 20 contracts, maybe you'll just buy 5 or something, right? You don't have to buy as many. If you want to just invest, say, $6,000, you would buy that many contracts. The cons here, time decay, there are commissions to pay, not much, especially if you trade something like Tasty Trade, where it's $1 a contract to open a position, 0 to close, plus a couple cents for exchange fees, up to a maximum of $10 a trade. You can't beat that. As far as cons go, well, hey, it is risky. Options have risk attached to them. One stock, one strategy, 1 hour a day. Folks, over the years, we figured out what works and what doesn't work in both trading and training. I think that's a really good thing because that's why you need DayTradeSPY. Why SPY? Follows the top 500 stocks, efficient use of analysis time. You're not going to need a lot of time, pre-market, post-market, Sunday nights and Monday nights and every day in at 8 in the morning, out at 4 in the afternoon. Then I get in front of my computer every morning somewhere between 8 and 8:30, and very quickly I determine which way the market is going to go. It's just that simple. The moves are quick. You're going to earn your daily gains faster. Usually I'm in and out of the trades. Usually by 11 o'clock, I'm done for the day. I made my money. Fairly reliable, consistent, predictive, forgiving, and prices can be anticipated in any market, up or down. You can make money both going up and down. If you think the stock SPY, you think the S&P is going to go down, you can make a ton of money to the downside. Wow, how cool is that? Why SPY now? Learn something new every day, right? Stay mentally sharp. As you get older, you want those cognitive skills to stay with you, right? You don't want your brain turning into mush. That's why a lot of people, when they retire from their long held jobs, you find them dead in 6 months. They're no longer stimulated, don't feel like they have any value. They feel like they've been put out to pasture. With SPY trading, right, with options trading, you remain sharp. And I talk to people in their 90s. I'm 69, but I talk to people in their 90s who are sharp as a whistle. It's because they stay sharp with their options trading. All right. You learn while you earn. Time passes anyway. Might as well make money along the way. Huge, huge profit potential. If you're serious, you can live that dream lifestyle. It's exciting. It's thrilling to beat the market. I love that part. People say, "Oh, the market went up 6%." Yeah, yeah. Well, we know we make that every day. We don't get out of bed for what you get for a year, right? We do that all the time. And this is what I like. You can pass your knowledge on to your kids. I don't think there's any more financial security in knowing that your kids know how to create wealth when they need to. To me, that is very, very liberating. My kids know how to trade. If they need money, they don't come to me. They go to the market. Folks, let's say you want to buy stocks. Let's say you want to buy 100 shares of SPY stock at $542 a share. Going to cost you $54,200. You okay with that? Whereas one single contract controls 100 underlying shares. If you buy that contract for $3, it's going to cost you $300. Imagine that. You can pocket the other $53,900, right? Keep that in a savings account for all that goes. Now, if the stock rises $1, guess what? You got 54,300. But if the stock rises $1, your option goes up with this delta, what they call the delta. This is the relationship between the stock and the option. So you would have, say, a 50 delta. That means your $300 investment is now worth $350. Now, let's say you want to put more money into it. You simply buy more options, right? I'm just going by one single option because each option controls 100 underlying shares. But your return on investment on the stock, if you'd have done this, you're getting at 1.8%. And let me just check that because I'm not even sure that's accurate. I think it's probably closer to 0.18%. 100 divided by 54,200 is actually, that's wrong. It's actually 0.18%. So I am going to correct this. It is actually 0.18%. 0.18% versus 17% for the option. 17% for the option. And I'm going to just change this here. 0.18% versus 17%. Well, which one would you rather have? Seriously? Right? And this is why, since discovering the power of options, I never look back. I never look back. Okay. And neither will you. And you know what? I don't know anybody who trades stocks after learning how to trade options. All right, folks, one stock, one strategy, 1 hour a day. Learn from our mistakes. You're not going to live long enough to make them all yourself. That is why you need DayTradeSPY. All right, one more quick run of these questions. And no real questions for this segment. So with this, I'm going to wrap it up. Thank you all for joining us, ladies and gentlemen. We'll see you hopefully tomorrow morning in the trading room. Hopefully we'll see you Wednesday morning at 11:30 Eastern Time in the workshop, the bread and butter workshop. And we also have the inner circle, the pick of the day, DayTradeSPY signal. We've got it all. Have a good one, folks. It's been a pleasure. If